Hello and welcome to a Bell Direct macro market update to keep you informed on the latest macroeconomic data that is moving markets today. In this video, we'll digest the latest CPI or inflation reading for the March quarter and what it means for the RBA's rate journey and your investment portfolio. For the 3 months to March, underlying inflation rose 0.9%, which exceeded economists' expectations of a 0.8% rise and is significantly higher than the two prior 0.2% rises reported in the two prior quarters. Annual inflation to March quarter of 2025 remained at 2.4% though, which is unchanged from the December quarter. Trimmed mean inflation, which strips out the volatile items like food and fuel, was 2.9% in the March quarter, down from 3.3% in the December quarter, which is the lowest trim mean inflation reading since December 2021 and is now within the RBA's target range. Housing inflation rose 1.7% in the March quarter, while education rose 5.2% and alcoholic beverages increased 1.2% as the key drivers of the quarterly inflation rise to 0.9% for the March quarter. The 1.7% rise in housing inflation was primarily driven by the 16.3% surge in electricity prices, mostly out of Brisbane, where most households have already used up the $1,000 Queensland government rebate. As we entered the new school year, education prices rose 5.2% this quarter, with primary education rising 5.6%, while secondary education prices rose 6.4% due to higher operating costs being passed down into higher school fees for parents to pay. Reduced supply in the fresh fruit and vegetable sector saw prices increase 2.8% over the quarter, which was the key driver of food and non-alcoholic beverage price inflation rising 1.2%. On an annual basis, food and non-alcoholic beverages increased 3.2%, alcohol and tobacco increased 6.5%, and housing rose 2%. As we can see on this graph here, the overall inflation reading is a favourable slowdown in inflation in Australia and provides further support for the RBA to announce a rate cut at the next meeting in May, given the inflation rate remains within the target range of 2 to 3%. While inflation is now under control, let's take a look at the other inflationary drivers that have moved lately. Services inflation was 3.7% in the March quarter. That's down quite significantly from the 4.3% in the December quarter, taking the reading to the lowest rate since June 2022, reflecting easing inflation across a broad range of services. This inflation driver has been a sticky one and really giving the RBA a headache in their journey on the rate cut front, and the fact that it is falling is a very welcome part of the RBA's outlook. Wage price inflation continues its downward trend in the December quarter, with a fall to 3.2% annually from 3.6% in the prior quarter, while the labour market strength continues easing with the unemployment rate at 4%. Retail spend is also trending down, with the February reading showing a decrease to 3.6% growth annually from 3.8% reported in January. We'll gauge the latest retail spend for March when the report is out this Friday. GDP rose 0.6% in December quarter from the 0.3% rise reported in the prior quarter. This was the highest quarterly rise since December 2022 and indicates Australia's economic expansion is faring pretty well despite elevated interest rates and consistently higher cost of living pressures. Increased demand for mineral ores from China amid the economic stimulus over there, and increased LNG prices were the key drivers of GDP rise in the latest reading. Following the release of today's inflation reading, markets pulled back slightly this morning from earlier gains, but the market is remaining in the green on Wednesday so far. Prior to the release of the CPI reading today, markets were expecting a 62% chance of a rate cut when the RBA next meets in May. And that concludes this Macro Insights video. I hope you have a wonderful day and happy investing.